Okay, now let's take up again with overhead cost. And this is really kind of important to understand because you're going to have two types of overhead. You're going to have applied and you're going to have actual. So just keep that in mind. So we have to determine what the overhead is going to be before we actually know what the overhead is. So to remember, financial accounting 101 looks at um, expenses in the past, and managerial accounting looks at expenses into the future. So what we're going to do is learn how to set a predetermined overhead rate to apply to the job that's being done so we can add these costs as it moves along. So you're going to determine the overhead rate, you're going to apply it to the specific job, and then after the job's complete and you know what the actual overhead is, you're going to record that and then compare that to the estimated overhead that you applied in this step. So you use the predetermined to apply it to the job as it goes through. When you get to the end of the period, then you record the actual overhead. And then you adjust that because you're going to have an applied account and you're going to have an actual account. And they're actually in the same account called factory overhead, only the debit is the actual overhead and the credit is the applied. And we'll look at that more as we go on. So to determine that overhead rate, you're going to either use, in this case, they're going to use labor, or you could use hour, you could use materials, or you could use any other activity base. And the activity base is used as a guideline. So we're going to look at it and say, here's our overhead costs. This is what we estimate it will be. This is what we estimate our labor is going to be. So if our overhead's 480,000 and our estimated labor is $300,000, if I divide that estimated labor into the overhead, I come up with a rate of 160%, which means for every dollar of labor that I spend, I'm going to have 1.6% or 1.6 more in factory overhead, or $1.60 is spent in overhead. And that's our predetermined rate. So now, if you look at this, so direct labor cost for job B15 was $1,000. I'm going to multiply that times 1.6 and come up with an applied or allocated overhead of 1,600. I'll do the same thing with job 16, $800 times 1.6, and that becomes 1,280. So this is our applied or allocated overhead used using a predetermined rate, and that's not the actual overhead. That's just an overhead we're using to estimate the job cost at this point. So that's now we're going to record the actual overhead. This is done when we estimate and as we're doing the job throughout. We don't really know the actual overhead until we kind of get to the end of the period. So now we're going to do the other part. Now remember this one here, this number here, do you see how this is a credit? That's on the credit side of the factory overhead if you look at it in a T account. Now we're going to do the debit side of that factory overhead. And this is what this looks like. Here's our raw materials. We took out a raw materials, and this is an indirect material. It's debited into the factory overhead account. So now, if I go back up here, and this was factory overhead at 67.20, you'll see that's a credit. So now we're going to start accumulating the factory overhead in indirect materials. Here's indirect labor. You can see how we've paid the labor out and put that right into factory overhead. See how it's accumulating? These are all debits now. And then you'll see these are our supporting expenses that aren't indirect labor or indirect materials, but these are things like depreciation, rent, utilities, and prepaid insurance that are all factory related. So now I have a factory overhead of $57.70 as a debit. So now I have the applied amounts, which was what, $67.20 here, and the actual amounts, which would be a total of $550, so and $1,100, so that's $1,650 plus $52.70. So that's 1652, I can't do that in my head. I'll probably need to get a pencil and paper. So if I do 1650 plus 5270, I have 6920 that's actually in the overhead. So my applied amount is 6720, and this one is 6920. And I guess it would probably help if I gave you an actual visual. So this one, it's not going to let me type in there. What a terrible thing it is. This one is 6720 credit, and this one's 6920 debit. So now, what do we do with that? That doesn't match. So what we do is we take the difference, and that would be we need to credit the overhead for 480 and debit the cost of goods sold. See, we've adjusted that out back and forth. And that will do our adjustment. Now here's an overview of that, of the entire process here. So here's our factory overhead we've put in. You see how this all adds up. This was $67.20. This one had a $200. Where did that $200 come from? There's a $200 difference here. So we're going to end up taking that $200 and putting it into, or increasing the cost of goods sold by $200 when we get to the end. So this ends up going into working inventory. And once it's done, this amount is done, it's transferred into finished goods, and then it's finished and put into, and when it's sold, then it is put into cost of goods sold and taken out of the inventory. It's plain as mud, right? So I need to be able to show you how the over and under applied works for you. I may have to do a better T account to make that happen. But for now, that's kind of the overview. I'll come back with another picture of it. Okay, this is a better, I can draw now. So here's factory overhead. It has 6720 in it. We then applied the actual. This is the applied. This would be easier if I do this. This is the applied. This is the actual. Now this account, factory overhead, has to be zero. It has to be balanced out. So right now there's a difference of $200, and that's on the credit side. So I need to increase that, right? I need to make that so it balances out. So I'm going to have to do an entry that credits the factory overhead for $200, which will make that 0. And then we're going to also debit the cost of goods sold, and that increases the cost of goods sold. So let's look at what really happened here. We only applied this amount of cost, $67.20. We actually had this amount of cost, $69.20, which means I haven't applied enough costs. So if I credit the factory overhead, that brings this account to 0, which is what we want. But then I also debit the cost of goods sold, and a debit increases the cost of goods sold, which increases the expense on this job. Does that make sense now? I hope so. We'll talk a little bit more about it in class. All righty.